What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 24th of 2020. Well, folks, I hope you all are having a great Friday wherever you are, and in today's video, we're going to be spending some time to take a look through a variety of markets, going deep on some TA for cryptocurrencies that I'm currently watching, as well as other markets such as cannabis markets, and talking big picture when it comes to oil markets and whether or not we're seeing any opportunity to possibly buy into energy stocks at this moment, or if there's a glutton supply and a lack of demand. We've got a lot of stuff to discuss, guys, and it's all coming up right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you holding Bitcoin long-term like myself, why not put it to work? Ledn gives you the ability to lend your Bitcoin and earn Bitcoin interest, growing your holdings over time. You can also double the amount of Bitcoin you own through their B2X loan service with real-time proof of reserves on-chain. And if you're in need of cash, you can even take out a Bitcoin-backed loan. It's tax efficient, meaning you won't incur a taxable event by taking out a Bitcoin-backed loan. And all Bitcoin is secured by BitGo Custody, a leading player in custody of cryptocurrencies. Check out the link in the description to start earning interest on your Bitcoin today. Alrighty, so let's go ahead and dive through cryptocurrency markets. Over the last 24 hours, we can see the vast majority of cryptocurrencies are in a no trend scenario between 1 to 2% to the upside or downside. Again, this is following after Bitcoin's been down a little bit over the last few days, correcting on some of the gains that it's had. But again, nothing too severe. As we actually take a look at the chart here, we actually got a rebound at, generally speaking, around the area we were looking at around 8,300. So if we take a look at the hourly here, we did dip a little bit below there, around that the mid-range of 8,200. And this is generally speaking around the range where we saw resistance last time, a bounce off their buyers coming in a little bit before we actually make contact with that even of 8,200. So again, one thing I always stress, guys, is to be a little less greedy than the other trader. I know some people, for example, like me, for example, will look for entries in this case, whether they're trading in and out of markets or if they're averaging in, and they try to buy exactly those big evens. I always, in this case, again, I can't give you guys financial advice, but what I always do is make sure that I always have my orders a little bit higher than others if I'm looking to buy in, and I also have my sell orders a little bit lower than others, so I make sure that I can actually liquidly trade my crypto to an exchange or on the other side, in this case, basically get my trade executed and be able to take profits in this case, rather than just paper profits where I'm still sitting in the position. All right. But anyways, really nice strong rebound here. Volume, much like the sell side, nothing too severe right now. What I'm going to be looking for here over the next few days is I want to see this continue and have follow through, because I will give the bears one thing here in the sense of Bitcoin's price. We had a great bottom here. What can almost look like a very rough triple bottom here, where we had basically three significant lows pushing sideways around the low $7,000 range and then bolstering up towards 9,000. At the end of the day, though, we have not set a significant higher low here. The last significant higher low was during the China news here. And I'd even say that I won't be entirely confident that we're going to get full swing momentum like we had back here until we get above 10,000. That's when the headlines start talking about Bitcoin again. That's a big, big even number. Again, I think that when we start to see very clearly that it's set a new higher low after having such a significant bottom here and multiple higher lows, right? This is going to be good. So sorry, let me make sure I read that correctly. A higher high here. My apologies. I was probably saying a higher low. A higher high in price. So that would mean Bitcoin, for example, and I'll just kind of demonstrate it on the chart here. Let me go ahead and get the proper drawing tool. There we go, polyline. There it is. So it'd be like if, for example, we keep climbing up and we actually get above, and if anything, we make support, right? If we saw this on the chart where Bitcoin actually comes down and rests on the support level and ticks towards a higher level, then that's exactly what you want to see. So you're setting those higher lows and also higher highs. And of course, on the weekly indicator, we're seeing all of our things flash here. All of our indicators are flashing that that's likely to happen. Again, we don't know if it's going to follow through. We're going to wait until we really get that price confirmation. I've already built enough positions, I think, this year for cryptocurrencies. I've stacked a lot of my available cash through the rest right now. I'm putting into my startup right now. But for those of you out there, if you have cash positions in this case, again, you just have to ask yourself, what market am I going to get a yield in? Am I really going to have a good experience investing in equities over the next year or two? It depends on your time frame. If you're thinking about putting money in something for a year or two, equities, record highs, pretty absorbently valued. You have companies like Apple adding $400 billion with little change in corporate earnings over the last few months since September, October. Seems like a little bit of a bubble to me. But again, as we talked about the other day, the Fed keeps printing in money. You got to have it in some kind of asset, most likely. At least if you don't want to be depreciated against the inflation. And that's your choice, guys. You got to choose what you want. I think in this case, in my personal opinion, I'm very well exposed to cryptocurrencies because I do believe this market is going to grow quite extensively over the next year. But anyways, we'll see what happens. So let's go ahead and actually dive a little bit deeper than just Bitcoin. If we take a look at Bitcoin dominance here, we can start to see it still looks like the trend is on course to reverse. If you take a look at the daily, we have seen a little bit of a rebound here, but most of the gains keep fading every time. Take a look at the hourly here. You can see these wicks are very, there's a lot of thin wicks here, where basically we're getting these rallies and we still get shot down at the exact same resistance range. It's generally speaking a little bit below 68, upper 67% range. Roughly speaking, we can see consistent resistance here. And we're not seeing any kind of signs of bullishness here. If I take a look at the daily indicators, I mean, yeah, maybe they're starting to flash here on the daily, but again, until we actually get above that price range, I'm not too eager on it. And not to mention, we don't use our 3 indicators really on the daily time frame. We use it on the weekly. Divergence growing on the MACD, the squeeze momentum indicator actually getting a little bit of an uptick this week, to be fair, and also stochastic RSI having another fake out like it did back here. So again, I think like many people have talked about, and I've kept this line here, even though it's not perfect, I think it is still indicative of this thing we've been talking about for a long time. It's just been overdue, where we're going to be coming back down and testing the support line. I'll go ahead and turn off the logarithmic chart so you can see it more clearly. So this is what I've had for a while on the chart, haven't touched it. Just again, signaling my confidence that eventually we're going to have some catch up and follow through, and sometime in Q1 or Q2, we're going to see the percentage for market dominance come down to 60 points or less. That's my belief personally. All right, so let's go ahead here. Let's take a look at some of the altcoins here that I do think are going to carry that move. First off, we've got Chainlink, and this is the link to BTC chart. We'll be taking a look at the Bitcoin comparative charts for the most part. We can see here that it did hold on critical support here, resistance multiple times in the past, support here as well. So a very significant level around 24,000 Satoshis, and we've continued to set higher lows and higher highs, which I really like to see. It's a matter of coiling in here on this ascending triangle and getting above 37,000 sats. If you get above there, which was previous resistance 3 times in the past, and you come in with Bitcoin doing well, altcoins getting market dominance, I think this one's going to shoot off. It's going to be very similar to Ethereum in the previous cycle. So the next one here is Raven. Now Raven has been still pushing sideways here compared to Bitcoin. So in that sense, you're not losing compared to Bitcoin. But it's been setting significant higher lows ever since. And even this time around when it pulled back from around 447 Satoshis down to 277 sats, we're still setting in a slightly higher low. And this to me showcases that buyers are still settling for less in this case, meaning they're paying a premium. And that means that with an asset that continuously sets higher lows, buyers are not waiting for lower levels. They're coming in more eagerly, right? So again, even though it's not very significant, I think it's a matter of, in this case, if you want to pick up a position here, it's showing the strength that it's holding these lows, which is nice. It just might not be that Raven takes off right away. I think when we get above 450 to 60 sats, which has been resistance about 2 times in the past, and really get above 500 sats, that's when the momentum kicks in. And you can also probably tell it in the volume as well, like we did both periods in the past. Another one as well that I've talked about and have a good position in is Kyber Network. So again, Kyber Network has been still setting these higher lows here. And I like that, again, we're starting to see a nice significant curve here. If you were to really get like a curve tool, you can start to see here that we're setting these kind of, of course, I'm not going to be able to get a perfect curve line, but it actually kind of showcases the significance here. Again, we'll have to see how it does over the next few days, but these higher low levels that are starting to break away from this nice support line, which already would have been impressive if it just held along this. So I like what I'm seeing here. I like the momentum. You don't have to do a lot of crazy TA. Take a look at the weekly. All the indicators looking pretty strong here outside of maybe the stochastic RSI and the squeeze momentum indicator. But again, MACD is still holding up positively. It's been holding the cross for a while. Going on to the next play, I want to take a look at Dash. As we can see here on Dash's weekly, lots of good volume. Compared to a lot of other cryptos, it's actually getting a significant change in volume from its past. Now we are looking at Poloniex. We could take a look, for example, Binance, just to get a range in that volume. Even more significant, if you really don't believe it, here it is. Really good volume coming in here, looking like Dash might have found its bottom. But if we take a look at Poloniex here, just to have more price action to look at if we want to, we can see here the chart is looking nice. It's getting a good, decent pullback. I think it needs to come down a little bit more. As much as I love Dash, I think it's going to come down to around 900,000 Satoshis per Dash coin. wouldn't be too crazy to ask for. Would be the midway point between this rally from the bottom to the top. So I think it's something that's very rational to see here. I think it'd be very, very nice to see this come down and lay on an area that was resistance for a good period of time here, right? Around 900,000 Satoshis. A nice big even number. But again, congrats on Dash. A lot of that came out of the launch of Evolution, which there's a lot of awesome stuff. It's years of work going into that price. But anyways, we'll go ahead and take a look here at Ethereum. Ethereum's doing quite nice, like Bitcoin, just again kind of flagging down right now, looking to hopefully maybe find support on something like 150. I think that would be really good if we can come down and make support on that, set a significant higher low that lines up with previous lows. That would be really good. If we take a look at XRP to BTC just doesn't look that good to me. I mean, you could say slightly higher lows here, but here's the thing, guys, with XRP. It's kind of like when people talk, when people like to go to the party scene a lot, right? They say that like, hey, I'm not here for a long time, I'm here for a good time, right? It's basically like that with XRP. I'm not planning to be in XRP for a long time. I'm here when it's a good time, right? I want to come in when the party's rolling, in this case when the momentum's kicking in, and I have yet to see that for XRP. I have no reason to buy XRP right now, right? When other players are setting significant higher lows and are continuing to gain dominance. We're not seeing that right now for XRP. All right. One thing as well I wanted to take as we were taking a look at ETH. Again, as we were talking about that 150 correction, I think it'd be coming down onto this recent resistance range and making it support. But just wanted to share the Bitcoin comparative chart. And the last one here is BAT. BAT looks really good as well. Again, the chart doesn't show much of a consistent trend. I do like the higher lows here, but I'm not eager to add any positions here outside of the position I already hold until we start breaking above this previous resistance range. You can see 3 times here. We generally kind of topped out at what used to be support. So anyways, that's it for the video, guys, in the sense of the TA for cryptocurrencies. As I've mentioned to you all, the positions I generally hold right now, I mean, I own a decent amount of cryptocurrencies, but I own some Bitcoin, I own some Ethereum, I own basically a good sizable position in Link, Basic Attention Token, Kyber Network, and I also own a few like small miscellaneous positions as well. And one last thing that I wanted to talk about, I forgot to go over this, is Litecoin. Again, I always want to stress this to you guys. When it comes to Litecoin is a very simple long-term trade. If you're not looking to try to 5 or 10x your Bitcoin gains and take on extra risk or hold, just smaller cryptocurrencies, the thing about Litecoin is that very similar to the gold to silver ratio, Litecoin and Bitcoin have this very cyclical pattern where they go between 600,000 Satoshis and 1,800,000 Satoshis, historically speaking. So basically 3x, in Litecoin's price compared to Bitcoin. So it can take some time. You don't get them, too often. It's been a while since we've had one of these full cycles. We had one that was close here. We're taking a log chart, so it actually was pretty dang close here. But again, this goes into that play, be a little less greedy than the other trader. Now, I'm not saying this is a guaranteed trade, but it's one of those things to consider. And we're down in this low range. We have been for a couple of months now. So keep an eye on this. For those of you like Litecoin, it's definitely, I think, in my opinion, I think it's a more bullish picture for Litecoin, but we'll see how it performs over the next coming months. But that's it for crypto right now. Definitely considering picking up some safe positions here in Litecoin if I make any additions. That or Ethereum. Those are really my 2 big plays now that I have a good amount of sizable positions in mid caps like Link and Kyber and Basic Attention Token. All right, so I want to go ahead here. One thing I just wanted to toss to you guys, we were talking about equity markets the other day, and I won't spend too much time on this. I obviously just wanted to highlight the significance that the Fed is actually now pulling down its repo operations, or at least it has been since the beginning of January here. So this is an important thing to keep in mind. If we don't see an expansion of the balance sheet and expansion of repo operations, then I would turn back to a more bearish tone for equities, right? This has obviously been the life support for equities over the last few months. So if we start to see this reverse, definitely take note of it. It's an important thing to keep in mind. I want to go ahead and talk about market cycles and again, really talk about, as we've been discussing earlier in the video, where can you park your capital right now? And one thing that I honestly, I used to always love investing in was the energy sector, and it was from a range of companies. I invested in, solar companies, and if I recall correctly, I at least was watching or trading, nuclear companies. I've been watching the sector for a while. I love kind of emerging tech sectors. But I also, to be fair, guys, as I've mentioned before, invested in energy companies before, like oil and natural gas companies. And as we're going through, this period of time where gas prices have been relatively cheap, it actually speaks a lot to a very big cyclical change where for the first time in history, we are starting to set lower highs in our consumption of oil and natural gas. And this is a very important and significant thing to take into mind here. So this is total gasoline sales by prime suppliers in the United States. And we can see back here in 2005, we actually set a record for U.S. consumption here. Right? Now, bear in mind, if we're talking about global demand, it's obviously grown, no doubt about it. You have globalization, you have a global economy that has in many cases, more of a middle class starting to thrive in a lot of countries. But here in the United States, we've actually set a lower high here in 2018. And as we've gone throughout 2019, we've actually been cutting down the average here. This is the 12-month moving average. Of course, you get some pretty volatile swings here with certain periods of time, the holidays, give or take, right? There is some definite divergence. But generally speaking, we can see here that we've started to set lower levels here, down 3% here, right? So what does this tell us about the future here? We have a record amount of supply. The U.S. is producing. It's the now a net exporter. It's one of the, I think it is actually now the largest producer in the world for oil and natural gas, which is really exciting. So we're the largest producer. We're now a net exporter. The supply is glutted, and then also demand is declining. So what does this tell us for the oil and gas sector? Well, it tells them that they're in a lot of trouble. It's one thing for there to be a glut in supply. It's already difficult enough to deal with these gluts of supply for individual companies that have multi-year-long projects that they have to cancel and shut down. Along with that as well, it also is difficult for entire nations who depend on oil's price going up, right? But when it comes to a demand cut, when it comes to the fact that you're starting to see changes in the overall demand for a certain commodity, this sets an entirely new precedent for the sector. It showcases that for the longer term trend, we are not going to see the growth, the record growth that we saw back over the last few decades. And it signifies a very significant change about our changing culture in the United States and abroad. This is not just a trend in the United States. If you look at what China and the EU and a lot of the other gigantic kind of economies of the world are doing right now, pushing for things like EVs, pushing towards renewables to some degree, you're definitely seeing that that's offsetting some of this demand, right? And again, I'm not here to really just argue what's right and wrong. I'm just trying to simply demonstrate, as an investor, should I park my capital in oil producers and oil suppliers? That's a very important question. Same goes for natural gas. Well, if we take a look here, I think this is one of the clearest physical examples here. The Aramco IPO, right? Now, the Aramco IPO is very off-putting for one reason. A multi-trillion-dollar company, a company that's over $1 trillion, pushing anywhere between $1 trillion to $2 trillion in valuation, depending on how you measure the valuation of the company, the largest oil company in the world, coming onto an IPO at those valuation ranges does not make sense, period. The only reason a company similar to tech companies like Uber and Lyft that were multi-billion-dollar companies that IPO'd very late, the only reason they IPO is to get out. It's to get out of your position, dump your equity, and hopefully hope that people will buy your equity and give you an opportunity to cash out at the top. That is the same reason why I've been so vehement for years about how, and finally the U.S. is changing this, how you and I, as retail investors, should be able to go out and be able to purchase early stage capital, in this case, basically be able to, early stage equity in companies and basically give up our own capital for early stage companies. But no, see, in the United States for a very long period of time, all you could do was buy at the IPO, right? Buy after it's launched on the market, after people got a discount price before the launch on the IPO, before all the VCs got their money in it, before the angel investors. No, you have to wait until all of that is over and finally buy it when it's already a multi-billion-dollar company. You think there's much room for it to grow after that? Do you think it's going to be easy for Saudi Aramco to double its valuation from $1.5 trillion to $3 trillion like you would expect to hopefully make off of investment over the next 3 or 5 years? No. It's not going to happen. And along with that as well, Saudi Aramco, the company, knows it's not going to happen because ever since their IPO here, you can see that it's just slowly tethered off here, a couple of bucks. The volume is dead in the water, right? No one's buying it, right? All the fuss about it is died off. They just literally, this past trading day, the 23rd, they had like a few $100 million of volume, which is nothing for a company that's over $1 trillion in valuation, bear in mind. So what I want to talk about here is just taking a look here at the commodity prices, because this is really what you have to track here. How are the commodities themselves performing? Setting significant higher lows, or excuse me, lower highs here over time. And if this breaks this support line at 50, you're not only breaking a very big even where a lot of companies depend the price to be in order to be profitable. You are going to see, most likely in my opinion, you're going to see prices come back down to 40. It's going to tether there for a while, and eventually we're going to go down into a price channel that I've been talking about for a very long time, for a period of decades. And this is basically where oil was, like crude oil futures were trading between back here during the 90s and the early 2000s. Between the price range of $18 up to around $40. I think we're very much on our way to that, guys. There's too much of a glutton supply. The demand is not there to meet it. And because of that, I think we're going to see prices very much over the long term. You can see this is a multi-year trend here. I think sometime this year, you could very well see an opportunity late towards the end of the year in 2020 where oil prices could come down back to 40. I think that's a very conservative estimate. A 20% decline, if we come back down to 50 and stuff, a 20% decline beyond that, that's not difficult. It's happened many times. Not last year, but towards the end of 2018 to the first month of 2019, basically a 3-month period here, right? 4-month period. We saw oil prices go from $75 down to $44, right? This happens before. This has happened many times. And when people don't give up and they don't stop cutting their supply, as it is right now, everyone's producing right now as prices are holding by a thread, you're going to get this continued glut and you're going to get a continued decline in price. So anyways, just wanted to share that with you guys. I think it's a very interesting topic. I'd like to know what you guys think about it. Do you agree or disagree? Do you feel that oil and natural gas are going to see growing demand here? We can even take a look at nat gas price. But nat gas is one of the other commodities I'd watch. And this is one that we've talked about. I actually usually have a moving average here on my chart. I'll just go ahead and get rid of the drawings. But you can generally see here we've had a declining channel of lower highs and lower lows. And it looks like we're set for another lower low, which is going to take us down to slightly above $1 here per CFD for natural gas, which is stark. It's a stark contrast from back here when it was peaking out around nearly $5 for CFD. So again, this is something where I would actually think that there's possibly some value around that range. If it's going down there, I'll be watching it. I'll be watching for some companies that I think could survive it, that will still provide for that demand. But it's going to be a little while. I'm not rushing into it. And I think it shows for the longer term trend. A market that continuously sets lower highs and lower lows is not a market you want to look forward to. It's where you look for fundamental value in certain occurrences where it's optimal for you to make a position in the market, where there's a likelihood that it would rebound, right? So anyways, that's what I'm looking for here, guys. But that's it for the video. Thank you guys so much for watching. If you liked it, drop a like. I hope you all have a fantastic weekend. I'm excited to showcase here, some of the stuff I've been working on in the coming months here, guys, on my startup. So if you guys haven't already, feel free to fill out the form down below. It's just simply inputting your email so you guys know when I've launched my startup. I'm not going to spam you with stuff, but it's banking for the 21st century. Second link that you'll see down there. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.